In this video, I break down 4 SPX 0DTE scalp trades that produce $3,200 in total profit per option in a single trading session. I reveal the exact daily scalping strategy I use, showing the precise entries, stop levels, option strike selection, and target exits for each trade using a structured, level-based SPX scalping strategy designed to be repeatable from session to session. All trades were executed using the day trading GPS SPX daily key levels V3.0 indicator, a framework specifically designed for trading both SPX 0DTE and 1DTE options. The indicator automatically generates daily SPX key levels before each session, which are used to identify trade entries, stop loss levels, and target exits. This creates a repeatable daily trading framework that helps traders execute quick scalp trades as well as capturing and managing larger directional moves level to level for greater profit potential during the session. Hello, in today's video we'll be taking a look at the Thursday, March 5th, 2026 trading session for the SPX CBOE index. We'll be day trading 0DTE SPX options utilizing the day trading GPS SPX daily key levels V3.0 indicator, which was just released a few weeks ago. Previous to that, we had the daily key levels V2.0 indicator. The V3.0 added a lot of new substantial features, of which we're not going to go into in today's session, as it's going to be a condensed shortened video. If you'd like to see a general overview of the SPX daily key levels indicator and what all the different levels mean and how to utilize the indicator, please look in the description of this video. As we pointed out in the preview, you'll see a link to an overview of the indicator, which was the V2.0 version. And then there's another link that is the highlights and new features of the V3.0 version, which is quite a long video. And that video has chapters in it, so if you don't want to watch the whole thing, you can just skip through the different chapters of that for specific sections. And also there's links to longer SPX session videos in which we go into all the different aspects and details of the daily key level strategy. Today's session we're just going to be focused, like we were in yesterday's video, on scalp trades only. So with this indicator, with the daily key levels strategy that we outline in our videos, there are two different types of trades that you can take: either scalp only trades, which are quick in and out trades, or regular trades, which require a larger minimum threshold, minimum required move in your favor. And then on those types of trades, you are exiting at a larger move in your favor, or you're adjusting the trade and adjusting your stop loss when it hits a certain threshold, and then you are either scaling out if you're trading multiple contracts, the majority of your contracts, and then you are managing your remaining runners for a much larger move, trending move in your direction with adjusted stops and a de-risked position on any remaining runners. There's also a link to that video which also goes into all those details and also has our late session lotto option strategy as well at the end of that particular video, which we go into how you can take advantage and what the rules and process are for the late session lotto options strategy, which basically runs from 2 p.m. to 3:45 p.m. with the session closing at 4 p.m. Okay, so as I said, this is going to be a short and condensed video. We're just going to go over the scalp trades. Today there were 4 scalp trades in the morning session, and basically calling it for a day. Usually on SPX, you're going to get your best moves during the morning part of the session from the open to about 11 a.m., or so, possibly 11:30, but then you go into lunchtime and then the early afternoon session, in which in most cases, in most sessions, things start to slow down. In the majority of sessions, that's obviously not always the case, and then they pick back up generally starting after 2 p.m. Okay, so we have scalp trade entry number 1 here. That's on the 9:30 a.m. opening candle. As you can see here, we have a long tail wick candle here, which did wick below today's bull bear key price level, which for this session the indicator gave as 68.4474. So that is your bias for the session, at least at the initial part of the session. And the most important level of all the key levels that the indicator gives on a daily basis. All of these levels are auto calculated every session after the indicator analyzes recent price action, volatility, and market dynamics. Okay, so we have this candle here. We're on a 2-minute chart. That is the recommended time frame for using this indicator for the daily key level strategy that we outlined. However, you can use this indicator very effectively for other types of strategies besides our daily key level strategies. So if you instead like to sell options for income, or you like to do other types of combination strategies such as credit spreads, debit spreads, iron condors, butterflies, or straddles or strangles, or one of the many other types of combination strategies that are out there. These levels can be used for those types of trades very effectively as well. And for those other types of strategies, you may want to use a longer time frame, leaning more towards the 5, 10, or 15-minute time frame. This indicator works on chart time frames from 1 minute up to 30 minutes. But for our daily key level strategy that we outline in all of our videos, we are simply buying calls on bullish plays and buying puts on bearish plays. Okay, and so for that particular strategy, the recommended time frame is the 2-minute time frame. Okay, so scalp number 1, we have a bullish entry on this candle that closes, this opening 9:30 a.m. candle that closes above the bull bear key price level. So we have our entry on the close of this 9:30 candle that closes at 9:32 a.m. The way that you figure out what strikes to use with this indicator utilizing this daily key level strategy is there's always going to be 3 strikes that you can use. In this particular video, like yesterday's video, we're just going to go over the standard play, which is one of the 3 strikes that you can use. I will briefly explain how you go through the process of what 3 strikes you can utilize if you want to utilize out of the money strikes and want to consider those versus the standard play at the money strike. So with this indicator, the standard play is going to be the at the money option strike that is closest to the price of the level that you're basing the trade off of, not the price closest to the close of the candle for the trade of the level that you're taking the trade off of. So that's an important distinction. So the price level for the bull bear KPL today is 68.4474. So the standard play is going to be the strike closest to this level, which is 68.45. So it's going to be a call option since this is going to be a bullish play. And we have our label here, which is one of the features of the V3.0, is that it has an opening candle alert for either a close above or a close below on the 9:30 a.m. opening candle. And it also has an acceptable range filter. The acceptable range filter basically invalidates the trade if it is outside of the acceptable range. If the candle closes inside or within, equal to or within the acceptable range, then you will see this alert, either this green alert here for bullish, or you will see a red alert for bearish. If it does not fall within the acceptable range, so if this was a candle which was a lot larger candle which ended up closing outside of the acceptable range for a trade off of the for a bullish or bearish trade off of the BBKPL level on the 9:30 opening candle, then this alert does not show. So if you have the alert set with the acceptable range filter and you do not see the label after the first candle closes, then you know that that is a no trade. If you see the bullish one, then that is a bullish trade. If you see the bearish one, which would be the opposite of this, it would be a red label above and with an arrow pointing below for a bearish trade, then that would be your bearish entry signal for the 9:30 a.m. opening candle. Okay, so 68.45 call. We're buying on the close of the candle. The ask price on the close of the 9:30 a.m. candle for the 68.45 call, $23.60. Now, what about stop losses? Stop losses are very easy to figure out with this indicator. The stop losses are the QL levels and the midpoint levels. So with this indicator, you simply look at the level that you're taking the trade from. In this case, the bull bear KPL. This is a bullish trade, so we'll be looking below for our stop losses. If you want to use the standard stop loss, it's the first midpoint level below the level you're taking the trade from, which is this level here, mid BBKPLS1, 68.3356. If you prefer to use a tight stop loss, it's the QL below the level you're taking the trade from, the bullish trade from in this case. QL below BBKPL 68.3915. Now, if you've watched our other videos, you will note that in those videos we recommend that you use the standard stop loss levels in your trades because that is consistently the best performer, and that is why it is the standard stop loss level. However, that's up to every individual trader. As you'll see in today's trades, the standard stop loss was never hit on any trade. The tight stop loss was hit on the initial trade. So that's just something to keep in mind that, you know, if you want to use the tight stop loss, that's up to your trader's preference. However, it will get stopped out. Sometimes the standard stop loss also gets stopped out. We do have several videos that we've posted where, you know, we also show losing trades as well. In most sessions we've had losing trades, we've also had several winning trades after the losing trade. So don't get the idea that, you know, this indicator, it's all just winning trades. That's not the case. However, it does have a good track record. And if you look at the end of this video, we're going to show you the user feedback and reviews from traders that use this indicator every day, and you can judge for yourself from their comments and the reviews at the left, which we'll show at the end of this video. You can also see those reviews if you go to daytradinggps.com, click on any one of the indicators, you'll see the reviews there that you can review for yourself as well. Okay, with the scalp trade with this indicator, utilizing the daily key level strategy, you are looking for a one level move in your favor to exit the scalp. How you figure out what the one level move in your favor is you take the level you're taking the trade from. In this first trade, that is the bull bear KPL level. You're looking in the direction of the trade. In this case, this is a bullish trade, so we're looking up. One full level up is the R1 level. 68, 67, 10 for today. Now, before we go into the exit here and onto the rest of the trades, I did tell you that I would show you how to use, you can use the process to also look at out of the money options. So like I said earlier, there are 3 different strike options that you can use on any bullish bearish trade. So with this particular trade, the 68.45 is the standard play. That's the at the money meaning the closest strike at the money to the price of the level you're taking the trade from, not where the entry candle closes. Now, how you figure out the 2 out of the money strikes that you would alternatively consider using is you take a look at the level you're taking the trade from, the direction of the trade, in this case up. You go to the first midpoint level. That is going to be your first out of the money option to consider if you prefer that over the standard play. 68.55.92 is today's price for that midpoint level. So that would be the 68.55 call. The last and third option and the furthest out of the money option is the strike closest to the level that is one full level away from the level you're taking the trade from. So again, taking the trade from the bull bear KPL level, looking up since it's a bullish trade, R1 68.67.10. The closest strike to that is the 68.65 call option. If you're not already familiar with SPX options trade in 5-point increments. Now, this indicator can also be used in Forex. If you are trading Forex and not trading SPX options, you can also use it on Forex on the SPX 500 8-cap Forex CFD. If you're a Forex trader or you're taking a trading challenge through one of these trading challenge companies and trying to get a funded account, then you can utilize the indicator for that. And also, for those people that are used to trading SPY, this indicator also works on the XSP, which is the SPX mini index, which relatively mirrors the SPY in the fact that it trades at 1/10 the value of SPX. The XSP mini index trades at 1/10 the price of SPX. So the advantage of that, now we're not going to show you XSP today, we're just going to go over SPX. The advantage of using the XSP, the SPX mini index, is that obviously since it trades at 1/10 of the value, the options also trade at approximately 1/10 of what SPX options trade at. And those options trade in 1-point increments. They also have 0 DTE and 1 DTE options. This trading strategy is either for using 0 DTE as we're using today or 1 DTE options, the daily key levels trading strategy for SPX. So the advantages of XSP utilizing this indicator with XSP, if that's your preference, is that for the same price of one SPX option, you could trade 10 XSP options as an example. And then that can be important if you're trying to do a trend trade, intraday, intra-session trend trade, or a regular trade as we call it. Then that gives you the ability to scale out because you're not just trading one option. If you're usually allocating enough money to trade one SPX option, you could instead allocate the same amount of money and trade 10 XSP options, which trade a lot like SPY options. One of the main differences is is that, and you can talk to your accountant, or you can Google this or look it up on ChatGPT or Claude AI. You can ask it about uh, some of the advantages of trading SPX mini index XSP options versus trading SPY options. So there's some advantages to trading those over that. I'll just let you look that up yourself, and you can ask it what are the different financial advantages, trading advantages, settlement advantages, etc., and you can make up your own mind. We do have a Stocks ETFs daily key levels indicator as well. So for those people that prefer to trade the QQQ or the IWM or the SPY, that's your preference. We also have a Stocks ETFs daily key levels indicator. That indicator is in the process of getting revised at the moment up to the V3.0 level. So that indicator will have all the different features that you find in the SPX Daily Key Levels V3.0 indicator. If you want to take a look at that video of what features were added, just to give you an idea. And we expect that to be released sometime within the next 10 days to 2 weeks, the Stocks ETFs V3.0. Right now we have the SPX Daily Key Levels V3.0, the NASDAQ NDX Daily Key Levels V3.0 for those people that like to trade NASDAQ NDX options. And then we also have a Futures Daily Key Levels and a Forex Crypto Daily Key Levels. And those other two, the Forex Crypto and the Futures Daily Key Levels indicator, will also be upgraded to V3.0 versions sometime within the next 4 to 6 weeks. And then they will be released as well. Okay, so let's just roll through the rest of these now. So at the entry here, now we have the exit here at the R1 level. So I was talking about earlier, you're looking for a one level move in your favor. We're looking at the level we're trading from. The direction is up since it's bullish trade. The R1 level is your scalp only exit. It hits it here at 10 a.m. One level move in your favor for a scalp trade exit. Bid price on the candle close is 29. That's a profit of $540 per option. Now we'll move on to scalp trade entry number 2. That occurs on the 10:02 a.m. candle here. We have a candle close below the R1 level, 68.6710. The stop loss on this trade is going to be above, since this is a bearish trade. So the tight stop loss is the QL above R1, and the standard stop loss is the mid R1, R2. As you can see in this case, neither one of these were hit. On the first trade, the tight stop loss was hit. So as I was talking about earlier, that's why we recommend to use the standard stop loss. That is why it is called the standard stop loss. Again, that's up to trader's choice, trader's preference. Everyone manages their account differently. So likes to manage their risk differently. So some people like to prefer to use tight stop losses, and that's fine. If you get stopped out, then you're just looking for the next trade. So I'm just telling you from experience, the standard stop loss is typically the best stop loss to use due to the consistency of it not being hit nearly as much as the tight stop loss. However, in a lot of cases, such as today, you'll see that on the next 3 trades, neither stop loss was hit, including the tight stop loss. So again, that's just up to trader's choice. We do recommend that you practice with this indicator for a decent amount of time before you start using it in a live account, just so you can get used to trading with it, get the process down. to where you don't have to think about it as much. So then when you put real money on the line, then you already know, you already have a good understanding from going through the motions of utilizing it and doing your entries, doing your stops, and exiting your trades. Okay, so we have the entry here. Now we have the stops. Now it's the same process as far as the strike. Standard play is going to be the closest strike to the level we're taking the trade from. 68.6710, so that's the 68.65 option. In this case, a put option, since this is a bearish play. So the price on the 10:02 a.m. candle, the ask price $20.90. We're looking for a one level move in our favor. That's right back down to the bull bear key price level. At 10:18, the BBKPL level is hit, so there's your exit. Bid price on candle close 31. Profit $1,010 per option. Scalp trade number 3. The entry is on the very next candle. Candle close below the BBKPL level. This is a bearish trade from the BBKPL level. Our tight stop loss will be the QL above BBKPL. Our standard stop loss, first midpoint above BBKPL. Our strike is going to be the strike closest to the BBKPL price. So that's going to be the 68.45 put. Here we have the ask price on the 10:20 a.m. candle, $22.60. We're looking for a one level move in our favor down to S1. 10:28 a.m. S1 level hit. Bid price on the 10:28 a.m. candle, $32.60. Profit $1,000 per option. Now our fourth trade is off our other contextual levels, the YDL level. This indicator gives you the SPX pre-market high, SPX pre-market low, SPX YDH level, which is yesterday's daily RTH session high, YDC, yesterday's daily RTH session close, YDL, yesterday's RTH session daily low. These are also very important levels on a daily basis. If you look at our video for the new V 3.0 features that were added, we also have a market structure scenario analysis that's done at 9:30. We're not going to show you that today in this particular video. However, this indicator does perform at the 9:30 open a market structure scenario analysis for the SPX session, and we'll display that on your chart if you enable that table display for that particular table at the first tick of the 9:30 a.m. open. You can go to that new features video for the V 3.0 and you can take a look at that particular section of that video, excuse me, and get an idea of how important that analysis is and what are the different features of that analysis and how that helps you in your daily trading. Like I said, all of the other indicators that are going to be upgraded to V 3.0 will also have the same features as the SPX V 3.0 as well. Okay, so we have the YDL level here. That's yesterday's daily low. It's a very important level. It's either going to hold or break. So in many cases, it does at least initially hold for a bounce. Some days when there's a lot of institutional selling going on, it will just continue to slice right through it and stair step right down from it and not have any sideways reaction or bounce. However, in a lot of cases, it just really depends on the market structure of the day uh, and what else is going on in the market with any bullish or bearish major news going on. Aside from that, though, in a lot of cases, you will get a bounce off of YDL. So in this case, we have a scalp trade number 4 entry on a bullish close back above YDL on the 10:32 a.m. candle here. Now with this indicator, you can go into the user control panel and how the stop losses are done for these levels, the PMH, PML, YDH, YDC, and YDL levels are done through the user control panel. So in the user control panel, which I will show you a screenshot of that after we get through this in the next screen, and you select either the tight stop loss or the standard stop loss, and then it will project that stop loss, either the tight or standard level on your chart that you wish to use. And then for take profit, you can then select your reward to risk multiplier, which the standard default is 2. So $2 of reward for every dollar of risk. Every dollar of risk meaning the amount of points on either the tight stop loss level or the standard stop loss level. However, that reward to risk multiplier can go anywhere from 0.25 in 0.25 increments all the way up to 30. So even though the default is 2.00, you could notch it down to 1.75 or 1.50 or 1.25 or 1 or 0.75, etc. if you're looking for a more quicker scalp. Or you could ratchet it up to above 2 to whatever 0.25 increment you want to go to. You could go all the way back up to 30 as an example. That would be the max or somewhere in between. However, another way of doing the take profit is not using the reward risk multiplier for take profit in the user control panel and simply using levels as your exit. So in this case, we're looking at the distance between YDL and PML. Now, in this particular case, this is a fair amount of distance. It's roughly a little bit over 18 points. So that is a pretty decent trade there. And in all likelihood, in most cases, for it to bounce off of YDL, there's a very good chance, depending on what type of market structure that we have, unless we have some sort of extreme volatility market structure, that from YDL back to PML is very good odds. So you could either use the reward risk multiplier, either the standard setting of 2, which is the default, or you could set it to whatever you want between 0.25 and 30, or you could simply set your stop loss and use the PML or one of the other levels, depending on which one of these other contextual levels. Or you could also set it to be going back to the BBKPL as an example, a move back from YDL back to the BBKPL. However, in this case, we're looking for scalps. We're not doing trend trades. We're not looking for an extended trade, as I pointed out at the beginning of this video, we're just looking at scalps. So with the scalp mentality here, we're looking for a quick in and out. So the quick in and out in this particular scenario, given the distance between YDL and PML, is simply a move back to PML. And as you'll see in the next screens that we go through, the PML is basically between 1.5 to 2 reward risk. Once we'll take a look at both the tight stop loss and standard stop loss with the standard 2 multiplier for reward risk, and you'll see where PML falls in that. So that can also be another way of you kind of gauging, is PML will get better, not looking basically at the default $2 2 times multiplier for reward to risk. Okay, so this is the 10:32 a.m. candle. Here is the ask price on the close of that candle, 24, for the 68.10 call. So with this type of particular trade, you're looking at the closest strike to, again, the level you're taking the trade from, 68.11.64, so that's going to be the 68.10 call. Now, if you wanted to look in this particular case and you wanted to know, well, what about out of the monies for these? Since there's no midpoint levels for these particular levels, the PMH, YDH, YDC, PML, and YDL. So how you would do that is you look at what are the levels between where is my target and then what is a main level in between the target and the entry. So in this case, we have the S1 68.22.38. So that would be your out of the money alternative, the 68.20 call. Your target is 68.29.99 the PML, so 68.30 would be your furthest out of the money strike that you would want to consider in this particular situation. But we're just, like we said earlier, we're just looking at the standard plays today. So the standard play is the at the money, the 68.10, $24 on the ask on the close of that candle. As you can see here, it hits PML, and these are kind of blocking all these other candles, but as you can see, it actually went all the way up a little past this midpoint here above PML before dropping back down. Okay, so that's the 1040, 68.10 call, $30.60 bid, profit $6.60 per option. So before we go to the next screen, we're just going to recap these 4 scalp trades. Scalp trade number 1, bullish scalp BBKPL to R1, 540 profit per option. Scalp trade 2, bearish scalp R1 back down to BBKPL, $1,010 profit per option. Scalp trade number 3, bearish scalp BBKPL to S1, $1,000 profit per option. Scalp trade 4, bullish scalp YDL to PML, $660 per option. 4 scalp trades total gross profit $3,210 per option before any slippage, commissions that you may be paying to your broker. Some brokers don't charge commissions on options and some do, or clearing fees. So SPX is run by CBOE. CBOE is the clearinghouse exchange for the SPX options. So they always charge clearing fees. So you're always going to pay the clearing fees even if your broker doesn't charge you options. So there's no way of getting around the clearing fees. Slippage is just going to be different for every trader. Just really depends on the exact moment you're getting out. So just keep in mind this gross profit is before that. However, slippage any possible commissions or clearing fees, especially if you're just trading one option, are not going to be very much at all. All right, so now we're going to go to the next screen. Okay, so we're going to look at the last trade, the scalp trade number 4. This is showing you in the user control panel. This is just scrolling down and taking a screenshot. These same things that you have for the bullish or bearish trades for any of the PMH, YDH, YDC, PML, and YDL levels. So it's broken up where you have a bullish entry section, and then it goes through each one of these levels on a bullish entry section, and each one has stop loss and take profit. Then there's a bearish entry section with the same thing. Every one of these levels will have its own little micro section within the bearish trade section, in which you can enable the stop loss and also enable the take profit. Of course, as we mentioned, if you're just going to use PMLs to take profit, then you don't have to enable this unless you just want to get a general idea of where perhaps the default one lies, or if you'd like to see the reward risk multiplier of keep ratcheting it up in 0.25 increments until you get to where you believe a further target would be if you're not doing a scalp, as an example. If you were doing a regular trend, regular trade, where you're looking for a larger move and perhaps scaling out, managing runners, adjusting your stop loss to break even or better, etc. And that would be, for example, if you were looking at a trade, maybe going back up to the BB KPL, or maybe yesterday's daily close, or maybe the R1 level above. So as you can see here, we have the standard stop loss selected from the drop-down menu of the stop loss type. So you select standard or tight. That's it, standard here. You can change the color if you don't want to have the same color as the line. You want to make this a different color. You can make the line style different if you want. You can also change the width. And you can also change the size of this line label as well as the offset, making it more to the left and more to the right. So as you can see here, in this particular case, the standard SL for this bullish YDL level would be here, and this would be an RR of 2. Next, we'll take a look at the tight stop loss and see what the difference is. Okay, same thing, except we're using a tight stop loss. So have the same default reward risk multiplier of 2. Here's where the tight stop loss falls, 6806.05. As you can see, that was not hit either. And then the RR of 2 in this case is below the PML, because the way this works is this is the reward risk multiplier of the risk amount you're taking here. So this reward is twice the risk distance between this and this tight stop loss. So if you have a standard stop loss, as we saw here, 6,800, that's why this risk reward multiplier of 2 is putting this above. So this is really more, the PML is falling more in the, say, 1.5. 1.5 range would be slightly below this on this particular one. If you're using the standard, 1.5 would be somewhere in here, below the PML. On the tight stop loss, the PML would be more probably of a 3-to-1 reward risk here, going back up to the PML. If you're interested in purchasing this indicator, you can request a discount promo code to use to purchase lifetime access to the SPX Daily Key Levels V3.0 indicator by sending us an email at daytradinggps@gmail.com requesting the discount promo code. Thank you. If you'd like to see more information about the SPX Daily Key Levels Indicator, please look in the description of this video. You'll see these different links here. One is a video overview of the indicator. The second one is the new features video for the SPX Daily Key Levels v3.0 version, which was just released a few weeks ago. Third, you have additional resources. That's Google Drive link is for descriptions, links to videos on different topics about the indicator. And lastly, a link to a video that goes into more detail about the indicator and the daily key levels trading strategy. And that also goes into our additional SPX Lotto options strategy at the end of that video as well. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.